Good evening, everybody. Hope everybody's having it's almost Halloween. What is today? Monday. I was telling the story the other night about, must have been 4 or 5 years ago, that Halloween was on a Monday night. So I had the front door open to the house over on the other part of Houston, and the back door, which would usually produce a nice breeze through the office area. It got late. All the kids had come and gone from their candy, and it was the Steelers were playing Monday Night Football. So I was sitting there watching the Steelers game, and all of a sudden, a nice big possum went walking through the front door. The problem was that he was walking out the front door versus in the front door. So then I don't think it was too much later than that. I can't remember whether it was the same night, but I was sitting there watching TV, and this little possum came in the door, around the corner behind the TV, and started across the room. He was probably only about 6 inches long, and I said, "Where the heck do you think you're going?" And he looked up at me with those wide eyes like he was incredulous that I would even ask that question, that he was coming in there. Took a while to get him out of there. And then, so I finally shooed him out. Another 15 minutes later, his big brother came in the front door. It took about 30 minutes to shoo him out. So, yeah, let's see, a screen door would have been a good idea. All right. Welcome, everybody. As we can see, there was no big change of investor sentiment. We're still kind of observing the obvious, which is that we had the bottom of the trend channel, nice support with a big Morningstar signal. We're in an uptrend as long as we stay above the T line. And where's the obvious target? Right up here to the top of the trend channel. So the nice thing we have about the visual capabilities of candlesticks is when it gets up here, we can see what type of signal it produces. If it does a sell signal, we go ahead, take profits, and then see if they're going to take it back down to the bottom of the trend channel again. So the NASDAQ at the same time, just been a slow, steady uptrend, staying above the T-line. Nothing really wildly exciting about that. And the S&P also, when they gapped it up from the kind of hammer doji through the T-line, we're in an uptrend, and we are out in the new territory. So there's still some good, strong, bullish sentiment in this market. Will tomorrow be a down day? We don't really know. Obviously, with Apple getting whacked, but this is why I tell people you don't want to jump to conclusions based upon after-hours trading. Because if I recall correctly, I thought they had Apple down here at around the 5.10, 5.9 level in early after-hours trading. Right now it's back up here to about 323, right in this area, which all that means is if they open this up, for all we know, they could open this thing positive and take it positive. So you don't really want to put a whole lot of weight on what happens after hours, because that's usually not the big money that is trading after hours. Okay, so let's see. Some of the other things, gold is still in a slow uptrend, but notice the stochastics are back to the overbought area. Fairly indecisive up here. Need to see whether they're going to stay above the T line. And same scenario with the silver. Silver trading very indecisively up at these levels. Or I say at these levels, not up at these levels. Notice lots of dojis right in here, so really not going anywhere. The dollar is still in a downtrend until you see a buy signal and a close above the T line. Interest rates keep lowering. Bond prices keep steadily moving up. Nothing there that's going to affect the markets. And I can't think of too much else. Sugar. And here's the scenario. The further away you move from the T line, the higher the probability. That's the final blowout. And they're going to bring it back to the T line. If they go back below it, there's definitely profit taking going on. What was that in? Sugar. Cocoa, downtrend, probably coming back to the 50. Coffee, broke this support level. Let's make this a little bit bigger. Broke this support level, and we're doing doji sandwiches. So that means there's still some more downside. In the meats, hogs broke out through this slow rounding bottom, broke out through this level, means we're in the next wave up. The other meats, flat. Here's feeder cattle and live cattle. Slow uptrend, but not anything that I'd get real excited about. Just kind of whipsawing in here. Let's see, soybeans. Notice how it failed at the 50, rolling over. Closed back below the 50. I don't know what this line is. Let's get rid of that. Still trading down, so there's a good possibility. This is wave 1, wave 2. If they don't hold here in this range, there could be a wave 3 to the downside. Wheat also looks like it's coming back to test the 50. And cotton. We shorted cotton a few days ago. Because notice when it tried to bottom, very indecisive trading, and then a failure at the T line. I don't know what this line is doing here. So we want to stay short until we see a buy signal. Okay, let's see. All right, now what we're going to take a look at is, first we wanted to do some stop loss, kind of some reviews on stop loss. For example, if we see this was a nice fry pan bottom potential breakout. Notice on this day that they took it up, kind of hit this wee little resistance level, then came back down through the open. Anytime you see there's a potential pattern and they're bringing it back down through the open, that's why you'll hear me often say you can buy this one, but use the open as your stop. So if this opened positive and traded positive and then came back down through the open, that told you there's something wrong. You want to close out the position. And or if it closes back below the T line, you want to close out the position. Here's a good illustration that as soon as they closed it back below the T line, it hasn't been able to get back up above the T line since then. MLNKX, I'm sorry. Here's a good example of a day where you have a perfect buy signal, opens positive, exactly what it should do. After a bullish engulfing signal, they came back and tested the T line the next day, took it up, opened positive. This was telling us we had a good trade, except when they came back and closed it below the T line, basically created a bearish engulfing signal. What can we analyze from this whole chart situation? See if I can make this small enough where we can look at it. They're having a hard time getting up through the 50. They're having a hard time getting up through the 50. They bring it back down below the T line on a bearish engulfing signal. You probably want to close out that position because that's pretty much telling us we're getting sell signals every time we start hitting that resistance level. What does the X mean at the end of a 4-letter ticker? I don't know. Is that a trick question? Unless it would. Oh, MLNX. Yeah, that is the symbol, MLNX. So anyways, observe your whole chart. If I saw this sell signal, my first inclination would be, all right, I've had a sell signal here. They tried to bring it back up. I've got another sell signal. What's that telling me? It tells me they're not trying to come out this way. They're still caught. Now I'll go back and say, am I caught in a downtrend? Yes, this is a downtrend. Okay, a few others, very simply, in most cases. Again, the halfway point of a candle is telling you it's time to be out of a position. So there's something in here that I was using as an illustration, and I can't find what it is. So I'll quickly go on to the next one. Let's see. All right, here's a case, too, that we had a good buy signal. So we break this down into just common sense analysis. Stochastic's heading up. We get a buy signal. We come above the T line. What should that be telling us? That should be telling us we're heading up. The next couple of days isn't telling us we're heading down. We're still heading up. A few more days, we're still above the T line. But now what's it starting to tell us? We better start seeing some buying to confirm this area. And if we see where they've closed back below the T line and below the halfway point of the candle that told us the bulls were in control, this is pretty much telling us we do not have the force to close out the position. The T line is the 8 exponential moving average. Let's see. Sconce is probably a good example of that, yes. Oops, let's make this. Yes, here's an example of, if you see these signals up here, they're either hammers or hanging men. Now, they're going to be closer to being potential bullish signals because every time they took it down, they took it up. Now, if they have a signal where they've taken it down and taken it back up, who should be in control? The bulls. If they open it lower and start taking it down, who's in control? The bears are still in control. With a close below the T line, that should be closed out. Now, that's the first time it closed below the T line. You have your second alternative. You can hold on to it with the idea that you're in a trend channel, but that makes only one possibility for the next day's trading, which is they better open it positive and trade positive to stay in it. If they open it lower, what's that tell us? It tells us the bulls or the bears are still there, close out the position. Now, one of the hardest things I had to do, so where do you put the buy stop? Put the buy stop. Shutterman, which one were you referring to? Let's see. Did we do body? Oh, yes, we did body. And AEO is more over here. So what do we want to see? We want to see buys. We do not want to see it close back below the T line. If we see buy signals, we should be seeing it move this direction. If they take it down one more day and close up the T line, what should we see the next day? They better open it positive and trade it positive. If they close it below, that's giving us two messages. One, obviously it's closing below the T-line. Two, the trajectory of this force has disappeared. We're not going anywhere. That's what I was saying. It was the hardest thing that I had to do or learn was that even though you had good trade setups, about 1/3 of them may not work. And as long as I could rationally put that into my head, that 1/3 of them aren't going to work, as soon as I see one's not working, now I've already pre-established that 1/3 of them aren't going to work, so I close it out. And that really kind of nullifies my ego, which would used to be, if I'm buying something, is because my great analytical ability said that this was going up. And if it doesn't go up, now I've got the problem with my ego that it didn't do what it was supposed to do. I must be stupid. It's not. We're playing the probabilities based upon what human nature does time after time. And if human nature says there's some buying, you buy, and if it tells you it's time to sell, get right back out. The fortunate thing that we have with candlestick scanning is that we can find buy situations, slow curves, plenty of patterns that are very bullish. Why stay in something where you don't know what the probabilities are going to be, or the probabilities have gone against us? Yes. Well, I'm telling you where to put the buy stops or sell stops if you're trying to get out. That if you see, you're going to have to see, once you have a situation, put your buy stop somewhere down here. This one should open higher and trade higher. So anyways, no, I'm not trying to tell you where you put your stop on every trade. I'm trying to kind of lead you into thinking, where should I be putting my stop? If I was buying here, why was I buying? Because I anticipated we should be going in this direction. If they do a sell and come back below the T-line, remember, just the probabilities that they're trading below the T-line on a close tells us that the probabilities are much greater that things are not good or they're going bearish. If I gave this one more day, it needed to open positive and trade positive and stay there. If it comes back, if it opens and trades positive, very simply, I put a sell stop one tick below where it opened, because if it comes back down through there, which way is it going? It's still going south, and it's not able to get back up above the T-line. No, I don't use limit orders. I will use stop orders. A limit order says if I want to buy at $60.65 on a stop limit, that means if it goes through that $60.65 level, I get it. But if it jumps through the 65 level, let's say it opens up at 670 and starts running, I'm not in it because my limit was that I could only buy it at 60.65. If I like a stock and I want it to be moving positive, I'm not going to try to limit myself of not being in that position for a few pennies. I'd rather pay up for it knowing that it's moving in the direction that I anticipated it should be moving. Trailing stops are, yes, and we'll get to some of these here, I think. I've written down enough of them to hopefully cover most of them. Oh, how can I? Let's see. L-O-T. Well, for crying out loud, how come you can't even read your own handwriting? Here's another simple case. Say you bought on positive trading. Where should this not come? It shouldn't come back down below the open of this candle, and or should not close below the T-line. So if I own this, and I was putting my sell stops in, it'd be one tick below yesterday's open during the day. Because if it came down there during the day, that tells me there's a lot of selling force still here when it should be buying force. that trade's probably not working. One tick's 1 penny, or right at that level. Let's see if I can find one where we'd use trailing stops. Now this is the S&P 500. Again, here's a case where they started taking it up. They opened it positive. As soon as they closed it back below the T line, even though your stochastics are just coming up, that told us we were moving in the wrong direction. If you were buying the SPYs that day, they should have been closed out. Again, just the probabilities that if you close below the T line, you're going to be going in a southerly direction. Does one tick work for the same for call or put options? Glenn, you're not buying the price of you're not trading an option based on its price. You're trading the stock based upon its price. And the option is just the method of which you are buying it. So it's not the option price that is in consideration. It's the underlying trading entity. So if you were buying you were buying calls on this stock because of the rounding bottom. This was either a hammer signal or a belt hold. At this point, you're buying the calls based upon where they are, based upon where the stock price is trading. So if the stock price opened higher tomorrow and closed back below the T line, it doesn't matter what the calls are selling for. The stock told you that they failed. You want to be out of that trade. DDD was a good example today if you were trading it. If you're in the overbought condition and you're heading up, you put your stop 1 tick below the open, or put it at the open of the previous day, because if it opens higher, it should be moving higher. If it comes back down through this level, that's pretty much tells you that the bears are in control. Where do you place stop after big rise in price? James, I usually use the halfway point of the previous candle because the Japanese rice traders say if that's the candle that told you the bulls were in control, they shouldn't be able to close it more than halfway down that candle. That pretty much tells you the bears are in control. So here's a case, too, where if I see something gap up big and start trading positive, put a sell stop 1 tick below where it opened, because logic says if they come back down through there, there's profit taking. Now, that doesn't necessarily mean you're going to be out of the trade. That might mean the profit taking comes down here, then all of a sudden turns around and starts heading back up. Worst case scenario is you put a buy stop right where it opened, because if it comes back up through there, that tells you the bulls are still there. If I bought CSUN on October 24th at 8:10 and got stopped out, where should I put my stop in the future? If you bought it at 8:10, right now, what's this trend doing? It still hasn't closed below the T line. You're still in this upward trajectory. Now, at this point, what's it tell us? Pretty much tells us to stay above the T line. It probably needs to open and trade positive. If it started trading lower tomorrow, I'd close out the position. You could also have closed it out today based on the fact that it closed more than halfway down this candle. But if you closed it out today, you still have the same parameters. If this opens positive and starts trading positive, you can always buy it back. And that was, again, I go back to my own education on candlesticks. I had the hardest darn time that if I saw it was time to sell, or if I sold here, I'd have a hard time buying it back here, because, boy, man, that doesn't do anything good for you. You sold it here and you're buying it back here. What I discovered is it's your ego that's eliminating the analysis. The analysis is if they're starting to trade it back up here, what did that tell us about the T-line? Told me the T-line was holding. I should still be in this position. Once again, if I'm buying here and I'm selling up here somewhere and I only make 80% of the profit or 75% of the profit on the way up, that's fine with me. I want to make sure that I'm making money when everything's moving in the direction. Yeah, hold on to your individual requests. When I tell Jim to do the double line, then you type in what you want to know. But you've only got about 7.38 seconds to do it. Ron, if you're limited by the buy and sell rules of 3 days, it might be that if you get stopped out of this one, all right, you have to leave it alone until you see a buy signal or see if it sets up after 3 days. On the other hand, let's say this opened lower, you close it out, and it came up here. There are so many other good positions out there to be buying. Just say, that one fooled me a little bit. Let me go move down to something that looks like this. You'll have the nice thing about our scanning with candlesticks is you're going to have way more trades than you can possibly handle. And that also allows you to have a little bit of flexibility that if you do close out something and you can't get back in right away, there's something else to go to. I can, yes, Joe, we can do a shorting. This is the dollar. The dollar, very simple. If you're in an uptrend, they should not be trading it back down below the low of a doji. If I owned the dollar, I'd have my sell stop right here at today's, or this low right here, because it came down through there. What's that telling me? It tells me the direction they're definitely taking it after a doji. Okay, Eagle is another example. There are going to be days when things look great, it opens positive, and then it closes right on the T-line. If it closed right on the T-line, what is our analysis for the next day? It better open positive and trade positive to stay above the T-line. If it opens lower, what's that telling us? Two things. It's confirming a bearish engulfing signal, and secondly, it's not supporting the T-line. Close it out right away. What's our big fear? That it opens here and then immediately starts coming back up, or it trades down a little bit and comes back up. You can always buy it back if it closed up here and the next day it opened positive. Oh, we've got one like that. Is that ONVO? Bearish left-right combo, evening star signal, stochastics rolling over. If you closed out as it's trading lower, very simple. If it opens positive, you buy it back. Because if you got not scared out, but got out of the trade and you had to buy it 30 cents higher, well, if this stock moves another $2, that 30 cents was just insurance that you weren't holding on to something going the other way. Ron, yes, that's true too. I kind of remembered that after I gave my explanation. If you got to wait 3 days, all right, that's just a limitation. So if I had a IRA or something where I had to wait 3 days, basically I might only have 90% of my money invested at any one time. So if I sold something, I could buy something else with the free cash that was still in the account, and that cash that was made available from the one I just sold, all right, in 3 days I come back and use that for something else. So you have to do a little bit more planning in that arena when you got that 3-day hold. Okay, what am I doing here? All right. Oh, we're still working down here on the stop loss area. All right, here's another good example of it opening positive. It shouldn't be coming back down through this level. Definitely not through the low. So if I was buying this, I'd immediately put a stop loss down here, either below the open or probably the open, because where did it open that day? Right smack dab on the T-line, which is what it had to do when it closed pretty much right here on the T-line. It had to open higher and trade higher that day, which meant it should be going this way. It shouldn't be coming back this way. If it came back, opened higher, and traded back this way, that, again, tells us two things. One, that the T-line's not holding, and two, note the trajectory of this trend. It needed something to tell us it was moving in this direction, and if there's trading back below this direction, it's time to be out. Now, are there times when I get stopped out down here, and then it turns right around and closes back up here? Yeah, a good number of times, but all I do then is say, is this a chart that I want to be buying? If it's a chart I want to be buying, I buy right back in again. Okay, let's see. CYOU. Another good example of, if you can see the pattern, notice the wedge, then notice the signal. A left-right combo. It opens positive the next day. That's good. They've still got a good possibility of breaking out to the upside. But when they came back and closed it below the T-line, or right on the T-line, same scenario. Where should this not be moving the next day? Shouldn't be moving, especially down to this level. So you just pick a point. Where does it logically tell you that the bears are still in control? If I own this and it closed right here and it opened positive the next day and traded up a little bit, say, all right, it better not come back down to this level, because if it does, that tells me we're still going in the wrong direction or we're below the T-line. So a lot of people will say, well, my money manager or this person or that person said you should sell out a position if you've got a 6% loss or an 8% loss or a 3% loss. The only answer I have to that is the markets don't give a hoot where you bought. The markets are going to move in a trend. All you really want to do is say, where is that trend not going in the direction? Sometimes it's going to be a 13% loss. Sometimes it's going to be a 0.3% loss. So the percentage has nothing to do with what the price is doing. The price is, you're just going to pick a spot that says, I shouldn't be in this position anymore if it moves through that level. So probably with less, I don't want to say subjectivity, because it isn't subjectivity. It's kind of analysis. What's happened here? Oh, no, not one of these. Oh, pshaw. There we go. Oops. S.NQ. NQ is a good example of, no, it's not. Bobby, you can do this the same thing on weekly charts. All right, smoke them if you got them. We're just waiting for the darn charts to come back up again. I don't know why the heck this thing does that. Let's see if there's something else. Huh. These charts just must wait. You're talking about emotionless trading. Yes, I'm talking about getting your emotions out of your trading. In my case, my emotions were the biggest killer. Now, I had the benefit of being one of the worst investors in the world before candlesticks came along. I would buy at the top, I would sell at the bottom, and then wonder why the heck was it that every time I bought a stock, it immediately went down, or vice versa? Every time I sold a stock, it immediately went up. Because I soon discovered that was because I was just like every other investor that without any trading experience, how they traded the markets. When I was a stockbroker, I'm still just kind of babbling here, waiting for these darn charts to come back up. When I was a stockbroker, I would do my sales pitch on a stock, and at the end of the pitch, I'd say, all right, let's get some, and the customer would say, well, I want to see what it does. And I would sit there thinking, what do you mean you want to see what it does? That was the one we already had up. So, if it goes up, you're not going to buy it because it already went up. And if it goes down, you're not going to buy it because it's gone down. So what are you anticipating doing when you watch it? So, and that's because most people have completely backwards, there we go. Completely backwards, I want to say, perspective of how to buy stocks. So I got to the point where I could be buying at the bottom, knowing that all of my parameters were setting up correctly. This isn't the best chart to illustrate that, but right here is a good place to illustrate it. When it's pulling back, well, the old rhetorical question is, where do you grab for a falling knife? After you see a reversal signal. Where do you sell? When you see a sell signal, especially when it's that far away from the T-line, at least we can now assume that a sell signal way above the T-line is going to bring the price back to the T-line. Is it going to support there and bounce back up? We don't know that. For all we know, it could crunch like this. And so why take that risk? Close it out, and then just see what type of pattern sets up on the support level. Tammy, that was my problem also. Was I would hate to sell a stock where I had profits in it, because what if I sold it here and zoom, it would, or somebody came with a buyout or an announcement and it took off without me. And I would be afraid to sell, because boy, would I look stupid as I finally bought a stock that was doing good and I sold it out on the first time I could take or sell it. And then I would be holding on to it all the way down here. And I would get here and say, man, I should have sold up here. I can't sell here because I could have gotten this profit here. I'll just wait for it to go back up there. If it goes back up there, I'll go ahead and sell. So that was using my trade strategy. Now I know, again, that 1/3 of the trades are probably not going to work. So take your profits and then see what the pattern does after that. Does your book address this issue? Yes. For CYOU, will you close right after the price pass your mental stop, or do you wait until the end of the day when it is closed below the T-line? And CYOU. No, I would be, let's say, right here, because I knew there was a wedge and we hadn't closed below where we're right on the T-line. So I used one criteria. It better open positive and trade positive. Well, it opened positive, but immediately started selling off. So it's not opening positive and trading positive. So I immediately set my stop below the close of the previous day, because if it opened here and traded back down below that level, what's that tell me? That's telling me the sellers are still in control. Sounds like my strategy, but I'm slowly changing it with your help. Sharon, and that's exactly, what I'm telling you isn't words of wisdom. It's from excruciatingly painful not doing what the charts told me in the past. And again, that's why I always use the term observe the obvious. The obvious is if something's selling off and it's not going up, close out the position. You bought it on the basis that it should be moving higher. Let me see if I got enough here to, let's see, Sohu, same scenario. If it closed below the T-line here, what does the rest of the chart tell me? Let's see if I can do this. What's the rest of the chart tell me? Well, I had a bearish Harami here. Now I've got a dark cloud here. What's that pretty much tell me about this level? They're not going through this level. And now if they close below the T line, now what can I extrapolate from that chart? That they're not going above this level. They're selling every time they hit there. Now they've closed below the T line. This is not a good chart to be in anymore. Close out the position. And the Mongo, the same thing occurs on a day trade or on intraday trading. If this was the 5-minute chart, I'd be doing the exact same thing if I was trading this stock on a 5-minute chart. Isn't there a free book on the members site about handling emotions? There probably is an ebook, but now it's probably been expanded into book number 3 of what to do based upon which signals you see, which patterns you see, and what your emotions are usually going to do in those circumstances. I mean, usually, what the average person usually does in those type of circumstances. Now, with candlesticks, what does that tell you, and what should you be doing then? So I've come down to one basic conclusion, that I do what the charts are telling me to do. Are there times when I close out right here, and the next day they gap it up and go up huge? Yes, but for every time that happens, there's 30 times where it will head this direction, and I'm glad I was out of it. All right, let me see what else we got here. FANG is another example. Oh, there we go. Doji, gap down, closed below the T line. Where did it do it? Right at the same level it did it before. If it closes right here, after going down and coming right back up close to the T line, what should it be doing? It should be opening positive and trading positive, telling us the T line was still acting as support. If it opens here and trades up a little bit and starts trading down, I want to be out of it. It comes back down through the previous day's close. Yeah, NK, I'll get to a doji sandwich somewhere in here. Mill was another one that had been acting well, but notice what was happening. Every time they took it down, they took it up, and then they closed below the T line. So what did this whole trajectory tell you? They weren't going up through this level. They were curving it back down. You should have been out here. Now, will every day be like this the next day? Not necessarily, but there's a good probability that you're still heading down at least to the 50 once it's closed below the T line. So here's a case, too, where if it started trading down and I closed it out or closed it out or closed it out, I'm not so proud as to not be ready to buy the next time I see it come back up. So if I closed out here and bought back here, all right, so I got zinged out of 30 cents, but then it went up another $1.40 after that. How far should you wait to sell for a stock that's drifting down from a large candle? I'll see, for example, let's go right here. This is why we want to know where we are based upon the T line. If I see a bearish Harami, where should it be trading the next day if we're still in an uptrend? It should be trading up. If it starts trading down, what's that telling us? It tells us bearish Harami is confirming that the buying has stopped. Same scenario over here. And notice the distance. Right here, it's hugging the T line. Every time it moves away from the T line, it comes back to it. So if I see a sell signal and see the bearish confirmation, where do I think it's going to go to? It's going to at least come back to the T line. Is it going to support there? I have no idea. Why take the risk? Close it out here. If it does a J hook, you can always buy it back. Again, if you were buying down here somewhere or even buying down here somewhere, and you gave up 15 cents before getting back in, at the end of the day, at the end of the week, at the end of the month, you're not even going to remember. All you're going to remember is you got out when it was time to get out and you got back in when it was time to get back in. Let's see, doji sandwich. We're still looking for a doji sandwich. All right. JKS. In both cases here, started getting a rounding top, closed below the T line, it was time to be out. Now there's time you can be buying back in, but now you have your hanging man, bearish confirmation, doji, bearish confirmation. What's this basically telling you? They're not going up anymore, they're going down. Yeah, I wrote the third book because I was getting so much feedback from people saying, I can see the patterns, I know when to buy, I just don't know when to sell. Or, I can't pull the trigger to buy, or I can't take profits, and these were all things that I had problems with myself through the years. But as I kept using candlesticks, and seeing what the probabilities were based upon a signal or a pattern, I could at least now tell myself I want to be buying or I want to be selling here, but I know what other type of pattern could be setting up, and I'll just watch to see if it sets up that new pattern. So it gives you a platform to trade off of based upon high probability situations. Let's see, CCIH is a good example. Shooting star closes right here. Where should it be trading the next day? If the uptrend was still in progress, it should be trading this direction. Notice again how far away we are from the T-line. If it starts trading lower, at least use the low of the day to say, if it comes down through the low of the day of the signal of the previous day, that tells me I at least know which direction they're taking it back to the T-line. Once again, do we think it's going to hold there? We have no idea. If it did, we could buy it back. If it doesn't, we're not holding on to something that's just giving back most of our profits. Okay. The halfway point is a good example. When it closes more than halfway down the previous candle that told you the bulls are in control, more than likely the bears are in control. Okay, Kohl's is a double doji sandwich. Yes. The doji sandwich is a bullish day, then a day of indecision. In this case, it was 2 days. This is what we call a double doji situation, even though we got a doji hammered. Notice on the pullback, it wasn't very decisive. After that, if they open a positive, what's that tell us about this indecisive pullback? It's pretty much over, that the uptrend's going to continue. So you usually get a day of indecision, and then when they open up positive, this candle right here is usually the same magnitude as this candle, thus the doji sandwich. Okay, let's take a few longer-term traders. I still like this chart. Not that chart. It's bad. PGH. And that's, oh, there it is. Okay. Coming out of this little rounding bottom. If you're trading it, you would have closed it out here. If you're holding it long term, you would probably use something bigger like the 50-day moving average. In this case, this is a longer term hold. Let's make this where we can see more of it. On the basis that it was paying, right now I think 7.5% of these levels. And a nice, long term to me, Lori, is 1 month to 6 months, and then I'll take a look at it again after that. But the buy and hold is, in my opinion, gone because there are so many things that are affecting longer-term holds. Number one, the market direction itself. As we saw in 2007, everybody was happier than a pig in doo-doo with the returns they were making on their portfolios or their retirement accounts. Then all of a sudden, midway through 2008, their assets and stocks were cut in half, and took 2 or 3 years to get back up to the problem. Not the problem, but the reality today is that you and I have the same investment information as any professional anywhere in the world, and we have it just as fast. Back 30 years ago, we all had to listen to the so-called professionals because they were the only ones that had access to information. And those people that had access to information didn't necessarily mean they were the smartest investment person in the world. Most stockbrokers, like myself, decided we wanted to be stockbrokers versus used car salesmen or Xerox salesmen. We wanted to sell stocks. And I keep relating the story that at the ripe old age of 21 years old, I interviewed with the manager of the office at Kidder Peabody in Houston, Texas, and he said, why do you want to be a stockbroker? And I said, well, I've been investing in stocks for years, and I've always had an interest in the market. And he goes, all right, well, can you sell? And I said, yeah, I've had little companies that I was the main sales force for them. And that was the criteria for getting hired as a stockbroker. You didn't have to understand what made stocks go up or down. All you had to do was be a salesman, and in my case, interested in the stock market. So those were the people that were telling other people what they should do with their money. And, I got way off on a tangent here. So what's your timeline to go from a trend trade to a long-term trade? Usually on the basis that if the trend is still working and I can see that there are other parameters that are supporting it, like the 50-day moving average, and it's still moving in a steady uptrend, I'll continue to stay long as I see that markets continue to move in that direction. And I think this is one of those that kind of gave a good example where it stayed above the T-line for months and months and months, so it became a longer-term hold. Right now, it's still a buy because it looks like it's at the bottom of the trend channel and starting back up, heading for the top of the trend channel. This is ISIS. It's a hardback book. I wanted to make them hardback so that if somebody was reading them and got mad and said, this is a bunch of pooey, and threw it against the wall, it wouldn't fall apart. All right, let's take a look at some other ones here. We recommended DYAX today based on a very simple factor, that if it broke out through this downtrending channel after some buying coming up through that level, that meant we were broken out of this wave going into wave 3. Now here's a doji sandwich. There's a bullish candle, there's a doji. There's a very simple rule of a doji. It's going to move in the direction of how they open it after a doji. So you see a bullish candle, a doji, and they open up positive the next day, the magnitude of this candle and the magnitude of this candle are going to be relatively the same. The 8 exponential moving average works just as well on a 1-minute chart, 3-minute chart, 5-minute chart as it does on a daily, weekly, or monthly. Okay, now let's see. We took a look at some of the other ones that we're holding. ONVO. Nice rounding bottom, breakout. Notice when they started gapping this thing up. Hold it back, but they haven't closed it below the T-line. What did we do today? Let's make this big enough so we can see what we did today. It closed as a bullish harami, which basically told us the T-line was acting as support and that the selling had stopped. AIR was one that we had put out a recommendation on a while back. As we saw it gap up through the T-line from a doji. Again, your best friend, which tells us as long as it stays above the T-line, it's going to stay positive or keep moving in a positive trend. Wave 1, wave 2, now we're going into wave 3. I would suspect we're going up to about the $32 area. Let's see. We recommended ABBV today on the basis they couldn't close this below the T line. And notice what happened yesterday. What is yesterday? Friday. They gapped it up above the open and did a doji. We should have been buying on positive trading today, which we did. Now, if it opens positive tomorrow, it still tells us we got this kind of flutter kicker setup going into or further into wave 3. We looked at this one earlier, IACI. Oh, what happened? Now, IACI. Kind of a belt hold on this chart. There's a belt hold on another chart. It's a big long-legged doji. Rounding bottom. Wave 1, wave 2, going into wave 3, with this being one that took out of a lot of the sellers. Anytime you see a belt hold signal, it's telling us that the sellers are being sopped up. They're out of the way. So now there's no sellers in the way anymore. Well, Shazam. Notice the kind of the wedge formation here. And then after a little hammer type signal, they gapped it up. Here's your doji sandwich setup. You closed above the T line. You did a doji. Makes this very simple. If they open this positive tomorrow, you can be buying with good confidence that this up move that day is going to be about the same magnitude as that candle right there, which is still telling us that this little scoop type pattern is still in progress. Where is it going to go? Well, here is your trend channel. Here's the top of your trend channel. It's probably going to come back up into the trend channel. Oh, let's see. Okay, I forgot Jax. Jax was a fry pan bottom breakout. And the reason you want to learn the patterns, especially the fry pan bottom, is a lot of people say, I don't want to buy a stock that's up 15% or 20%. You do if it's coming out of a pattern, because there might be another 200% on top of that. Let's see. I forgot where I was. Over here. Oh, just take a look. We did look at Apple. Right now, Apple is trading at 523. It had traded all the way down here. Now it's trading back up here. So as long as it stays above the T line, you stay long. If you own Apple and it opens up right in here, very simply, you put a sell stop right below the low of this. If they take it back down through there, that tells us the bears are in control. ABV, no, that's not a tweezer top. Remember, tweezer top is the exact same level. This went higher today. Yeah, hold on to your individual stocks. We'll get to all of them eventually. Might be well past some of your bedtime, but we'll get to all of them eventually. Well, shut us butts. What's happening here? HRC. All right, the belt hold. Tells you the sellers are out of the way, and now they've taken it up. So what type of pattern do we have here? We got a J-hook pattern again in progress. There's probably more upside to it. ANF was one of the retailers that has been starting to look pretty good. Came out of a series of flat trading dojis. Now they've told you which way they're taking it. Makes it very simple. If they open this positive after coming back and use the T-line as support and then closing right here at the 50s, that coming back to the T-line and acting as support pretty much told us they aren't going to close it back below the T-line. Now if they open it above the 50, that's telling us the 50 is not acting as resistance. Your pattern is starting to break out. You can be a buyer. Along with that, a bunch of the other retailers, clothing retailers, are acting well. Here's a doji bullish confirmation above the T line. Wouldn't be afraid to be buying this one on positive trading. And then you just use the T line, which would be the halfway point of this candle, as your stop. So if it closed down here and the T line tomorrow was up here and it closed below the halfway point, just very logically, if this is the candle that told us the bulls were back in control, if they close it more than halfway down that candle, the bears are still in control. A J-hook pattern, we'll get to that one also. Let me, Zoom. These are a few of the retailers that are starting to pick up some steam. Now, this is a potential J-hook where you've had a strong price move, a pullback. Notice the indecisive trading in here right at the T line, and they're taking it back up. So a J-hook has one prerequisite. You have a very strong price move. Then you have profit taking. So this is essentially a wave 1, wave 2, wave 3 pattern. We can see visually what's happening here, that the bulls are starting to step in. There's our bullish harami, which tells us the selling has stopped. They can't close it below the T line, and even over here they're using the T line as support. Makes it very simple. If they start trading this positive, if they break out through this level, you're going to have another run the same magnitude of that one. J.C. Penney. J.C. Penney closed above the T line today. This is a Morningstar type signal. Let's make this bigger. Couldn't get above the T line, little star, and then back up above the T line. This makes it very simple. This downtrending indicator has now been breached. You can buy on positive trading, and now just use the T line as support. That was J.C. Penney. Arrow. Nice fry pan bottom. Came up above the 50. Makes this very simple. If they open this positive, you can be buying, because if they break out through here, they're going to pop up to here. If they break out through here, more than likely they're going back to the 200. Let's see. DSW is DSW. Notice the type of pattern. Nice buy signal. Left-right combo with some dojis. Bullish confirmation. Now, where's our resistance level? Most people would think, all right, it's right here where all this congestion is. But notice the nature of this congestion. It's as flat as a pancake, which meant everybody that was holding on, getting bored, get out. Now, all of a sudden, they see new buying. Everybody with jumping in along with that new buying creates a slingshot effect to the upside. Pretty much our recommendation on CYNO a couple weeks ago. Flat handle, slingshot effect. Where did it go? Right smack dab to the 200-day moving average. Now you have a left-right combo. So here's a situation. If you're in the overbought area and you've finally stretched up to reach the 200, at the point where I thought was at the 200, that's where I go up and I flip to my 10-minute chart. And if I start seeing that they're doing a double top on my 10-minute chart, and we're right smack dab up here, button heads with the 200, as soon as it started trading back below the T-line, I'd take profits. As long as it stayed above the T-line, we know the uptrend's in progress. But we're now just touched a resistance level, and if they start selling it off, that means they failed at that resistance level. Start taking your profits at that point. Or is it just as simple as a J? It's just as simple as a J, Pat, that the new pattern is going to create a J. Okay. There was an illustration here for some reason. Well, I don't know what it was, so I'll rapidly move on. KYTH. Again, the advantage of having a chat room. Oh, I know what's happening. We're looking at the 10-minute chart. All right, let's try this again. AU. There we go. Fry pan bottom breakout. Little consolidation. Again, notice the nature of the consolidation. Doji, little hammer. That's not very decisive. Where do you think your next target is? Probably right up here for the 200-day moving average. KYTH. Nice fry pan bottom, slow curve. This one you can be buying on positive trading. Now this is the area where what could possibly happen coming out of the slow curve? A big, huge pop. So this is where you start looking at buying some of the calls, because one of two things are going to happen. It comes up here and fails. If you see that, you close out the position. If it comes up here and closes right here, now we're looking at if they break through this level, there could be a good, strong, powerful, instant move to the upside. So it makes for very good timing if you're an option trader to use these patterns. SYGR, big bullish harami, closes right back up above the T-line, confirmed. So here's another case where if I sold out down here, I don't have any qualms about buying back up here, seeing that we did a bullish signal, and they're still back up above the T-line. And I say I have no qualms about buying back because most of the time in my life, if I bought back after I sold it, after it closed below the T-line, I probably made, I didn't say I probably made, my impression is that I've made a lot of money buying back a position that told me it was time to get out and then telling me it was time to get right back in again. Where did this one break out? Right here with a gap up. This one you can stay long with the idea that if it breaks out through this level, you've still got some more upside. STX, another one that's done a doji sandwich setup. So this makes this trade very simple. If they open this positive tomorrow, which way are they going? They're going positive. And how far? Probably the same magnitude as this candle right here. So if they do that, that means we're up here, which also means we're through this level, or we're in another J-hook type pattern. There's probably going to be more upside. And then going right on further, the plural of STX, STXS did a doji right here on the 3T. Now, when somebody says it goes up big, where should we close it out? Well, if this was the candle that told us the bulls were definitely in control, it better not close back below the halfway point. And that tomorrow might be where the T-line supports it. Oh, okay, after hours, STX is down. So this is why your entry and exit strategies are based upon how things open. So we would buy this if it opened positive. If it's down, that tells us we're not in that trade. Well, I'm sure there is. You might just have to email Abraham at candlestickforum.com. Okay. All right. I guess I went through all of them. Well, it should be. That took us an hour and 10 minutes. All right. So, is there any questions on candlesticks? All right. With that, then, Jim, go ahead and do the double line. All right. I got most of these. Fortunately, I took the Evelyn Wood speed reading course. All right, Jim, do the second double line. All right. I don't think I can scroll this. Okay, oops. All right, we did DDD. DDD needs to open positive to stay in it if you're trading it. If you're holding it long term, I would still use the 50-day moving average. All right, we did STKS. TXMD is confirming by TXMD. Oh, let's see if we can. We did JAX. GLUU. There's your doji sandwich. Bullish day, doji. They open up positive. Good, strong, even bigger than this candle. This one you stay long until you see a sell signal. ANV. ANV. You can be owning this. I wouldn't be real excited about this one just yet. But here's your crucial point right here. You can see there's a resistance level at this area. JAKK, all you can do here is stay long. And MBI, whoops, let's see, here's a perfect example. JAKK, still in a nice uptrend, still above the T line. Where would I want to put my stop? I'd probably put my stop right below the low of this day, because that's about the halfway point of this candle. But if they brought it and closed below that level, that's going to give us kind of an evening star signal, which means they're going to pull back to the T line. So again, nothing of as far as the magnitude of your percent gain or loss. Just where would I not want to see it trading in this trend that would tell me the bears are now in control. Did I do MBI? MBI, kind of a doji sandwich also. Just this one, all you can do is continue to hold until you see a sell signal. SUPN. Another little doji sandwich type setup. Not a true reversal down here. So this one I would suspect is going to bounce up to the 50 and then watch it come back, test the T line, and then you get a buy signal. So that when I see a reversal that doesn't have a true candlestick reversal signal, I usually look for kind of a stutter step setup coming off of that. NES, that's a good looking chart. Hopefully the volume was big enough. But notice where it came back down today, right down to the T line and the 20, and came back up and closed at the 50. Makes this very simple. If they open this positive tomorrow, this whole downtrending channel is now breached and the resistance level of the 50 is breached. You're now in an uptrend. VISN. Now here's a case where when it came back down, this was a case where when they kind of gapped this up and took it up, notice where it was up here. It was a pretty fur piece away from the T line. That made it very simple. You put your sell stop right here, because if it came back down through that level, it's going to form some sort of candlestick reversal signal or sell signal. And so we got it sold off. You could buy it back here, but when they closed it back below the halfway point of this candle, which was the candle that told us the bulls were back in control, this told us the bears were back in control. So you take your profits up here, you get back in here, you get back out. All right, you gave up a little bit of your profits, but you weren't holding it and giving up a bigger share of your profits. PBR has a good looking chart. Got fat fingers tonight. Nice little fry pan, cup and handle, gap up doji through the resistance level. There's your best friend right there. That means they're going higher. CENX. This told us a story. Now, here's what I do on a big price move. What are we in the business for? To make big profits, or make good profits anyways. So if I've got a stock that's moved like this, then the next day it opens lower. If it was trading up, started trading up, very simply, you put your sell stop here. If it started trading down and waffling, and then started trading down, I'd close out the position because it's probably going to do some profit taking. The fact that they closed more than halfway down this candle pretty much told us they're probably going to come back to a support level like the T-line, which they did yesterday and today, opened right on the T-line, started going positive. So this one you can be buying on positive trading tomorrow. Now, on a day like this where it's up a huge percentage, this looks like almost 100%. No, I'm sorry about that. Looks like maybe 25%. If it opened here, I'd close out the position. What's my worst case scenario? I put a buy stop right up here. But if it comes back up through that level, that means the bulls are still there. Hawaii Air. Oops. Doji Sandwich. There's your bullish Arami. This one would have had me out. This one would have probably had me back in, and or today would have had me back in. So there's going to be a lot of times where I give up profits, but then I come right back into the trade. MOS. There's kind of your little scoop pattern. This makes it very simple. If this opens positive tomorrow, which way is it going? It's going positive. If it goes positive, what's it doing? It's breaking through this little trend channel and breaking through this level. SanDisk. SanDisk you can be buying on positive trading. The consolidation, as you can see, was sideways. They touched the T-line, taking it back up. If they open up positive, they're moving out into new territory. Tesla. Tesla, you can go short, but I would definitely put Fibonacci numbers on. I'd put everything possible I could. Here's kind of a support level, and your stochastics are getting toward the oversold, not there yet. But if all of a sudden you see a couple of days where they're supporting right here, this tells us this area is a support level, and this could just be a pullback, ready to start the next leg up. So I wouldn't, if I shorted Tesla, I would definitely be nimble. I'd be ready to cover it on any signs of strength. Angie's List, yes, you hold on to this, but if this traded back up below or above today's high, which would be through the T-line, you close it out. Worst case scenario, they bring it up and close it back below the T-line. You can always reshort it. CSTE, Doji Sandwich setup. I'd buy on positive trading tomorrow. Constant Contact, another one that has told us that this was not coming back down into the range. There's now the message is they gapped this one up. This is why where it closes is very important to the Japanese race traders, because where they close it is the final decision they make. Now today they did a bullish Harami, which means if they open positive, you can be buying immediately using this level right here as your stop. But if they open positive, they should be going this direction. Why? Because they gapped it up. That gap up tells us there's a surge of new buying enthusiasm coming into this position, and that's exactly where you want to be. You just want to see when the selling, or when the profit taking is over. CEAC, I would suspect if it opens lower tomorrow, it's coming back down to test the T-line. But also notice you've got a gap to fill all the way down here. So if they come back down through the T-line, there's no telling where they're going to pull back to. EBIX. Bearish Doji Sandwich. Now you got a Doji. If this opens lower, they're probably taking it at least the same magnitude as that, which means they'd probably take you down to the 50. URRE. This one is too flat. There's no signal here. No signal down here, just junky trading. I'd be somewhere else. Hospital Corps of America. This one you can buy on positive trading tomorrow also, heading for the top of the trend channel. Scotty backed off today, but couldn't close below the T-line. But it's still not showing great enthusiasm. This better trade positive or open positive and trade positive to stay in it. LCC. This one you stay with as long as it doesn't close below the T-line. And ACN. Nice little slow curve setup. Notice the T-line crunch. I'd be buying this on the basis that here's your next target. There's a little gap to fill up there. So you've got a good prospect, but again, you got to use your analysis of whether this has a strong enough percentage move to make it worthwhile. Another doji sandwich setup on open positive here. You can be buying. Let's see, in Deere. Deere, I wouldn't be long or short. That's a lousy chart to even be looking at. It's just sideways. Las Vegas Sands. This one, if it opens lower tomorrow, you close out the position. It needs to open positive and trade positive, stay in it. OUTR. Doji today, again, if this one opens positive, you can be buying. Tells you the profit taking is over. Ego. Stay long. You know you're not you're nudging up to the 50. It needs to go through the 50 to tell you they're not going to waffle it between the T-line and the 50 for a few days. NBG closed right on the T-line today. Same scenario here. You've got a left-right combo, so it has to open positive and trade positive to stay in it. Probably even had a good probability of or excuse to close it out with it closing below the T-line. But since it's already had a very strong move and pulled back to the T-line before, give it one more day. If it opens lower, you close it out. It needs to open positive and trade positive to stay in it. IBM can't get back up above the T-line yet. And also, if it does, just be aware of the magnitude of the move. Your next resistance level is going to be this downtrending channel just below the 50. KERX, Doji setup. This has to open positive. It's going to move in the direction of how they open this one tomorrow. If they open it positive, you can be buying it. And RTH Red Hat, another one that can be bought on positive trading. ATTU, Morningstar Signal, Doji Gap Up. You can buy this on positive trading also. And NSPR, Doji Sandwich Setup. This told us with the bullish aroma, the selling had stopped. When it did get up here, when they gapped it up through, that told us that there was no more resistance here. Now if they open this positive, now your J-hook pattern is in progress. Amazon, stay long. Remember, they gapped it up through this trend. If they open this positive, you're still a buyer. And CCE, that's Cocoa, S.CCE. This one you can buy, not a real true reversal signal, but you're back up above the T-line, you own it as long as it doesn't close back below the T-line. AMT, stay long. Today wasn't anything that really told us there was a change of investor sentiment. Disney, stay long. Again, nothing out there that told us there was any great change of investor sentiment. And DEC was a bullish engulfing or bearish engulfing signal. This one better trade positive. Now you still have a gap up, but if they start trading it lower, they're going to be doing some profit taking. And if they do profit taking back into this area, that tells you haven't broken out of that area yet. You're going to be waffling around in here, probably waiting for the T-line to catch up. Same scenario here. It better open positive. If they start trading it down, they might be bringing it back down to the T-line. AFOP has gotten to be very inconclusive here. It needed to trade positive. Now, it needs to open positive and trade positive and do kind of a flutter kicker signal or double flutter kicker signal. If it opens positive, you can be buying. Just use today's close as your stop. We did PBR, we did MBI, CHDN. This one I'd be not long or short. That's that's flat. Open, this one you can be buying using the 50 as your stop, which would be approximately the halfway point of that candle today. And where did we just do that? IIB, long-legged spinning top. This one has to open positive to stay in it. If it opens lower, you've hit a double top up here. FU, setting back up. If this opens positive, you can be buying it. Notice how indecisively it's come back right smack dab to the 50. If they open this positive tomorrow, you want to be a buyer. They have been breaking out of this wedge type formation. And Zillow, I wouldn't be long or short. There's no trend to this right now. Gent is where you put your trailing stops. There's your doji sandwich, which implies there's more upside, but you're in the overbought area. I wouldn't want to see it trade back below today's open. If it does, it tells us they're probably bringing it back down to the T-line. And ZHNE. This one is getting flat. If it opens lower, you close out the position. Then you just put your buy stop up here around the 450 area. If it comes back up through there, it might be a week, it might be a month, it might be 2 days, but you're not at least sitting around with your money waiting for it to come up through that level. NTAP, stay short until you see a buy signal and a close above the T-line. SLCA, this one you can buy on a positive open. Your J-hook pattern, notice the tails to the downside. If they open up positive, it tells you the J-hook pattern, which would be a strong price move coming out of this fry pan bottom. Pull back, indecisive pullback. Now taking it back up for the same type of move. That's your J-hook. Now we call this the classic. When we come out of the fry pan bottom, what do you expect? A strong price move. When you expect or see a strong price move and see a pullback, what do you expect? Profit taking in a strong price move or your J-hook pattern. Oops, SQNM. Scoop type pattern, doji gap up. This one you can be buying on a positive trade. Expect your first resistance though is up at the 50-day moving average. Soda, nothing intriguing right now in this one. You're in a downtrend. You're not seeing any real great strength. You did see a little hammer gap up. It's got to break through this level or basically through the 50. I think we did see SETESPR. Stay short until you see a buy signal. Today is not a buy signal. It's not quite a bullish engulfing signal. Please look at FU and tell me where I should have gotten out. When it closed back below the T-line. At this point, it should have bounced. With the closing below the T-line, tells you get out of the trade. Where they're going to take it, they're going to take it back to the 50. On the other hand, once it moved up big like this, good place when it gapped up a little bit and traded up, just put your sell stop right here. If it came back down through there, that wasn't a good sign. Facebook, S.FB. This one you want to be out of. You might even want to be short if they open this one lower tomorrow. There's your left-right combo that closed right on the T-line with the opening lower. That should have told you immediately. They're not going this way. They're going this way now after that left-right combo. GME. This one, all you can do is stay long as it stays above the T-line. As long as it stays above the T-line, you essentially have this uptrending situation. Just stay with it. AUY. This one you can be buying with the expectation that you're going to have to watch diligently when it gets to the 50. Disney, you can stay long. STXS needs to open higher and trade higher. If it trades back below today's low, you close out the position. And VEICL, this one is a perfect setup for a positive trade tomorrow. Notice what it did today coming out of, whoops, that was yesterday. Oops, yeah, that tells you the story. It needed to open positive and trade positive. Now it's right back on the T-line, so there's only one thing it can do. It has to open positive and trade positive to stay in it. WBMD, stay long as it stays in an uptrend. Let's see, is that the E-minis, Mongo? I don't know whether they come up here at all. I have to get that symbol. This is Carnival doing a little hanging man right here at the 50. If it opens lower tomorrow, you take profits. What it's going to do is come back, hit the T-line, and let the T-line crunch put it back up or push it back up. Let's see, Hershey. As long as this stays above the T-line, you stay with it. Now, with a big move like this, it better not close more than halfway down this candle, or that tells you the bears have started taking their profits. Or the bears have started coming in. This one closed back below the T-line. After a gap up, if you didn't close it out, it better open positive and trade positive. If it opens lower, close it out. And GTAT, when it closed back below the T-line over here, basically told you they couldn't get through this level. It was probably going where? Back to the 50, which is what they did. But your stochastics are still heading down. I wouldn't be surprised if they don't come down and test the 50 another time. And THI, stay long as this one stays above the T-line. So did we do Las Vegas Sands? Las Vegas Sands also has to open positive to stay in it. ARIA, this one's coming back up. Now it's back up to the T-line. So it'll be very important what it does here. If it opens positive, you can be buying and just use the T-line as your stop. And PAMT, J-hook pattern. If this opens positive tomorrow after the Morningstar signal, J-hook, basically want to see it get up through the 200, which would take you into wave 3. And DIX, this one you can buy on positive trading, a doji sandwich, and you can see that it's basically supported here on the 50. ANR, should have been out of the trade today with it trading back down below its open after hitting the 200 for the second time. ACI, still nothing wildly exciting there. Just nothing there. And AUY also needs to get through the 50 very quickly. GDX. S.GDX. This one has to open positive. Here at Doji in the overbought condition right at the 50. It's going to move in the direction of how they open this one tomorrow. Didn't we do PBR? PBR gapped up today. This one you buy basically thinking that you're going to be on a 45 degree from this level after your Doji gap up. CTSH. This one can be bought on positive trading tomorrow because that means they'll be breaking out through this level. Nice little rounding bottom situation. Okay, let's see. Let's call it quits there. You look at volume. No, volume is not price. I'm buying price. When you say positive open, do you mean above the high or above the close? Roberto, just something that's telling me it's not a positive open to me is when we wake up tomorrow that we're not seeing the pre-market futures and the Dow down 140 points. That's not going to be a positive open. And the stock that I'm looking at better not be opening down like halfway down the previous day's candle. I want to see it opening right around where it closed, and preferably a little bit positive. Okay, let's call it a night. I've got to take out the trash. That's what my job is here in Pittsburgh. When you see a BIIB, yes, let's see. Do you look at the 10 or 15-minute chart, seeing the double top from the overnight, now below T-line, looks bearish and overbought? Yes, so they're going to move this in the direction of how they open this one tomorrow. Thank you, Terry. There are 7 programs listed on the website under options training, but it's not clear which one you were offering in your last webinar. You also said there are member rates. Yes, the member rates are $200 off the public rate. Just email Abraham at candlestickforum.com, and he'll get you set up. And those programs, yes, we're going through those programs, but we're going to go in a lot more detail as far as why we're buying specific stocks and what type of strategies we're going to do once we see a chart pattern. Okay, everybody, have a good evening. We'll see you in the chat rooms tomorrow.